Hello, the duo is back for episode number 17. It's hard to believe we're already on the 17th episode.
Honestly.
We come at a time in between the holidays where sometimes things are slowing down a little bit, but certainly not for us. We've been fairly busy. But before we jump into it, you want to take a second to talk about your Thanksgiving? How was it?
Yeah, it was good. We hosted at our house, actually, which was fun. So we got to have several people over here and a lot of good food. And yeah, it was a really good time. What about you? I know you were not even on this side of the pond, so to speak.
Yeah, had a little jump over to Europe for some things, but did get back in time for Thanksgiving. So real low key, and I listeners, you can call me a little bit crazy, but actually ran a half marathon all by myself during Thanksgiving Day. So got to come back and feast up after that. So yes, I am crazy.
There you go, getting ready for your half Ironman. So awesome, yeah.
Something like that. Well, let's jump into this. Today, we wanted to talk about financing a custom home. So, what does financing look like? What does that even mean, right? I think we all know what financing means as in general, but how does it relate to designing and building a custom home? When do I need to get the money if I'm going to finance the home with a construction loan from a bank or a third party? So that's really what we wanted to briefly discuss here today. Stephen, you want to kick it off for us?
Yeah, sure. And like you said, yeah, I mean, we're specifically keeping this to new home construction financing. And it also will really just encompass custom homes. You know, I know production builders or some of the big box builders actually offer their own financing or will build the home, on their dime and their dollars. And then if you bust out, the home is very similar to all the other ones that they build. So it's fairly easy for them to turn around and just sell it in a neighborhood that they're already in and they're already building right around the corner and possibly even built the same floor plan. So excluding that market, right, this is what we're talking about is specifically new home construction for custom homes. But with that clarification, really there's two different types of financing that we have seen most prominently when we're working with clients, and that is cash or a construction loan. So I think cash is somewhat straightforward. People still do have plenty of questions, and how does that look? When do we pay different draws, and how do we pay the builder versus the subcontractors? How does that all split up? So that's something we'll talk through, but mostly the construction loans are where, it takes a lot of coordination, and it's multiple parties that are involved, and there's different things that have to happen throughout the process to make the bank feel comfortable giving people these large sums of money. So, you have anything to add that?
Yeah, let's take probably just about 10 seconds here to talk about cash. If you are coming to a custom home builder with cash to finance your build, it's going to be broken into payments for progress of completion, right? So there's going to be, hey, we've done so much, we get the builder gets whatever you've agreed upon at the in the contract, right? Is typically how that's most oftentimes going to happen with cash financing. With a construction loan, it'll be a little bit different. So when the money is needed to pay the bills, there will be a draw request. So we'll jump into that here in a second. But just wanted to address the rest of this episode. We're going to be talking more about working with bank financing, not so much cash.
Yep. And I want to clarify on one thing you said there too, that when cash is involved, a client's cash, if you're working with a professional builder, it's not uncommon. And actually it's very common that the builder will request draws, and that draw will encompass all of the work that has happened, and that needs to be paid for or has been invoiced, and also the builder's share of the amount of work that's been complete, just like you said. So typically that construction amount, that draw, as we're calling them, goes directly to the builder, and the builder is professional and divvies that up as it needs to be divvied up. It's not on the client to pay anybody individually. The client is making payments solely to the builder, and the builder is acting as the ultimate general contractor, takes all the money in and splits it up accordingly so that everybody gets paid the way that they have been contractually agreed upon to be paid. So that's the way that it should happen. And cash or construction loans work the same way. It's just who's fronting the money. Is it a bank or is it the client? So yeah, little differentiator there.
Yep. Yeah. Great point. So really, how does a construction loan work? Well, you're going to go to a bank and request a construction loan. Ideally, before any construction has started, or even while you're in the design phase, you can never talk to the bank too early, because there's obviously limitations on how much money they're willing to lend to anybody, right? It's going to be based off of your financial picture, your assets, and also your income. So you'll go to the bank as early as possible to at least get, similar to like going to get a mortgage on an existing home, to see what you're qualified for. You're qualified for, say, $1.5 million, right? That will also help the builder understand, okay, what you qualify for and what you are comfortable with may be two different numbers, and that's perfectly fine. But it's going to help us make sure that we're not doing anything out of order, and that we do have a way to actually finance the home that you want to build, so that we're not wasting anybody's time. So you go to the bank, get the pre-approval for whatever amount that is. We sign a contract. The builder and the homeowner would sign the contract together for whatever is agreed upon in terms of the floor plan, the specifics, the payment schedule, and then obviously the total, the cost, right? Whether it's cost plus or fixed price, it doesn't really matter. Some banks will actually dictate, I will only allow funding on fixed price contracts, but there's a lot of things that vary from bank to bank or credit union to credit union. So we get the contract with the builder and the homeowner, and then from there, a lot of the paperwork, the typical paperwork of validating, proving your assets, proving your income is there, just having all that documentation, and eventually you'll close on the construction loan. And typically the cost to do so is the closing costs, and then if the bank requires any upfront equity, or what we often term skin in the game, saying, hey, there's more money that needs to be put into this, either in terms of a deposit to the builder or into some equity account with the bank. Again, variable on the bank that you're working with, and then that's it, right? So then we have this, what we call like an escrow. We have a construction escrow account. It's your money. It's your funds. The liability is on you as the homeowner, and then we're ready to start building, right? So really, we'll finish the rest of this, but that's all the work that has to be done concurrently while we're working on a plan set, while we're working on finalizing that dream home and what you're after, while we're even up to the point of doing permitting and other approvals with the neighborhood and things like that. So there's a lot of concurrent things going on, and this is certainly one critical one to make sure that we can move forward and pay the pay the cost to build this thing.
Yep. And I think you touched on it in there, that there actually are a lot of checks and balances in this system. The bank isn't going to give you more money than you qualify for. They're also not going to give you more money than the completed project is going to be worth. So they do an appraisal just like they would on an existing home. They'll look at the floor plan. They'll look at your selections or your finish outs that you're going to have in this home that's to be built. They're going to look at even the builder's track record a lot of times, because the bank doesn't want to get into a partnership with a builder that they have very little confidence is going to finish the job to the way that they say it's supposed to be finished. So the bank is doing a lot of things to help protect not only your assets, but also the bank's assets as well, which is the majority of where these construction loans come from oftentimes. So like we were saying, there's a lot of checks and balances there, and it's good for the clients. It's also good for the banks, and it's good for the builders too. The builders know that they're building within a scope that everybody's comfortable with. The bank is comfortable with it, the homeowners are comfortable with it, and the builder in turn should be comfortable with that as well. So it all checks out there. But you were finishing up your point by saying that we are now at the point where we have an escrow account, so to speak, of money that we can use throughout the build. So where do we go from there?
So you've closed on the loan, we've started construction, and we've started to incur costs to build the home. At that point, we will request what is called, we've referred to a draw from the bank. So the way that works, a draw of money, right? The escrow account, all the funds, even after you've closed, all the funds are still sitting in the bank, right? The money has not been given to the builder. So again, as Stephen said, there's a lot of checks and balances. We request a draw. That typically involves us documenting how much money we are requesting, where it's going to go, and for what expenses. Whether it's a fixed price contract or a cost plus, again, it doesn't really matter. It still is agreed upon up front that, hey, this is where this money is going. You as the client will approve that. You will sign off on it, saying, hey, this is I agree to this, because you're seeing the progress of the project, so you know that there's obviously been expenses incurred. And then at that point, we submit the documentation, and in most cases, the bank will hire an inspector to come out and really just take pictures. They're there to just take pictures for documentation purposes on the progress of the home. They are not checking for quality. They're not checking for anything else other than there to take pictures, show proof that this is the house being built on this particular lot with the builder that we've agreed to do business with. Again, checks and balances. From there, it goes back, they approve everything, and then the money is wired directly from the bank to our bank account. So you do not see the money. However, you will typically get a monthly statement, very similar to like a personal checking account, saying, hey, here's how much money has been drawn on the escrow account for this construction loan. And then typically with that statement comes the interest that you owe on that. Whatever interest rate you have agreed to in that contract will be, okay, you're only paying interest on the money that has been drawn, not on the money that is still sitting in the escrow account with the bank.
Yep. Yeah, that's a really good point there that you just talked about, is that a lot of times these construction loans are interest only throughout the build. And so that plays well with building quickly, number one. But it also does not play well with higher interest rates, of course. So, it's definitely something that it's a progressive thing. So it only accrues interest on the amount that you've taken out from the bank. So if it's first draw and you took $100,000 out of your $500,000 escrow account or amount that you can fully draw from, you're only getting charged interest on that 100,000 until you pull your next draw. Then it increases that, of course, and then you're paying more interest per month. So, it's a progressive thing, and it actually helps throughout the build that you're not paying the full amount of interest on the full loan amount from the very beginning. That's typically what we see. Of course, every bank might be different. Credit unions are usually some of the most lenient and flexible, sometimes have the best terms. So check with your local credit unions, but we've seen good success working with those. And yeah.
So just a little insight into from a builder's perspective. We are constantly incurring costs on that build weekly, as long as the project is progressing, right? So another of many reasons to make sure you've done your due diligence on selecting a professional builder is making sure that their accounting and their bookkeeping is in tight order, because they need to code those costs to the appropriate house, appropriate project. And as you can see how this works, the builder is going to have received so much money at any given point in time, right? But the costs are going to be either over or under. Very rarely are the costs going to be at that exact point in time the exact same to the money that has been drawn. So you're always either over or under what you need, right? So the point in me sharing this, what you need from a builder's perspective, mind you. So the point in me sharing this is that you want to hire a professional builder because you need to make sure that they have a well-run operation financially, that when they have, for example, the builder has taken 200,000 in draws, but the expenses are now 250, 275,000 because there was just a big payment to, for example, to the drywall company or the framer. Uh, there's many times where the builder just needs to be able to have the proper cash flow to carry that until they get the next bank draw, right? It's just too much paperwork for everybody, including yourself, if the builder is requesting a draw every other day, right? So typically what we see to minimize the amount of paperwork for all parties involved is anywhere between 5 to 10 to 12 draws for the entire project. So I just want to share that little insight from the builder's perspective to help you understand how it's managed. So it might be that we have $200,000 of money for the project, but our expenses are actually 275, and in that next draw, it's meant to catch us up, right? And then it could be the flip side in that, oh, we have actually drawn more money than the expenses, but we're about to very soon incur other expenses that are going to catch us up. So it's a constant overage and underage until you get to the very end. To be rest assured, again, with a professional builder, at the very end, everything is trued up to what you agreed to in that contract.
Yep. That is a fantastic and very important point that maybe I can try to recap here so that people hear it another way. Working with a professional builder is the key there. That the worst thing you can do is find a fly-by-night small builder that quoted your project aggressively, I'll put it that way, or underbid your project, and then they don't have their own financial backing to be able to carry those times where the construction draws are less than the amount that has been invoiced for the job. Then you've got delays in construction if trades say, hey, I'm not coming back until I've been paid. Builders not caught up on payments, or whatever the case is. But man, it's that would be a really tough position to be in if you're working with a small, unprofessional, whatever, even just a builder that is not organized. I mean, that could be enough right there, that they've got job costs coming in from different jobs and they can't keep them straight because their accounting's not good enough, or they're not using efficient QuickBooks or whatever their accounting methods are. They're getting everything mixed up. And then next thing they know, they've taken too much of a draw on one house and not enough on another. It's financial accounting for custom home builders is a huge beast. I mean, it is it's a very tough topic, and even accountants have a tough time with it if they're not familiar with custom home builders. So I say that not to scare people and not to not want to work with a custom builder, but it just is even more of a supporting argument to go with a builder that you trust and a builder that has a good track record and a reputation of being a professional custom home builder.
Yep. I want to make it very clear that just because a builder is large doesn't mean they're in a good financial place, right?
Yep.
They could be, but they may not, right? And that's really part of, again, doing your due diligence, because at the end of the day, you can be a multi-million-dollar home builder, but if you don't have good cash flow, we've seen it happen, Stephen, and it's a horrific experience for the homeowners where they're, and we'll digress after this because I think that it can get way more complex, but they can be using construction draws from one project to pay bills for another. So again, it comes down to organization, and the builder has to be very aware of their finances to make sure that everything is in order, that they're using that money for the right project, and that again, cash flow is key because there's a lot of bills coming in and out. As you know, we don't have to state the fact that home building is capital intensive, and it's always going to be that way, right? That's just the nature of the industry, nature of the business. So it's the home builders that have mastered that, and you have their trust that you can expect a smooth, pleasant experience. But that's really key. And again, I want to reiterate the fact that that's not to scare you. This is just, we want to share this because we want to educate everybody that is listening to us.
Yep. Yep. Yeah, and good differentiator there that size actually doesn't matter. It's a really good point. And actually, some of the bigger builders get into bigger trouble because they're doing the wrong thing and have done it that way for however long it took them to get big. Then their problems are multiplied. It's just a bigger problem. It's the same problem they had from the time they were small, but now it's just a bigger issue. So it can even be messier as you get bigger. But yeah, that's a really good differentiator that, yeah, you need to find a builder that is doing well cash flow wise and is a reputable and honest builder.
Yep. So I would like to sum this up or wrap it up as, there's a lot of things that the bank needs, just in terms of documentation. There are checks and balances, of course, to protect every party, as there should be. And every bank that we have worked with, they've been fair, they've been equitable, and it's really about just communicating when things come up. We've had minor issues come up, and you work through them, right? And I think that's the mindset you have to have going into it. Now, the last thing I want to state is really two things. Again, you cannot start talking to the bank early enough. The amount of time it takes from beginning discussions and interviewing banks on which ones you like more than others based off of how they're going to service you, what their interest rates are, and all those other things that are important, that may be important to you. I would say it's going to be anywhere from as short as 4 to 5 months up to 6 to 9 months. And I know that's a wide range, but working with the banks to get a construction loan does not happen quickly. So that 6 to 9 month time frame that I gave you is from start to actually closing on the loan, saying, hey, we can begin construction and start pulling draws. And by the way, the bank will not allow us to start construction until the loan has been funded typically. So there is a timing element there as well. We can't just start construction and be a certain way through the project and then go to the bank and say, okay, now we want money, right? Or now we want to close on the loan. They will not allow that. So really, Stephen, that's how I'd sum this up. I think is hopefully insightful for our listeners here on just a little bit more about financing. At one point in the past, I'm inactive, but at one point in the past was a licensed loan officer in the state of Texas. I never actually funded or did any construction loans. It was your traditional and conventional mortgages, but funding and financing homes and real estate is all similar at some level, right? So really good stuff, Stephen.
Yeah, absolutely. Good points there. And I think that you did a great job of summing it up and provided a lot of value for all of our listeners, being, like you said, a licensed mortgage or loan originator in Texas.
Former, let's get that clear. Not anymore.
Yeah, don't hold us accountable. But yeah, even more than that, I just want to tell the listeners too that you're always on top of our construction loans, and you run all of our finances on our end, of course, working with an accountant and everybody else that we need to. But, without you, our business would not be as successful as it is, I guess is the best way to put it. So want to thank you for that, but also just let the listeners know that it's not hollow advice that's coming out of your mouth or mine. We've seen plenty of construction loans in our time of building homes. We've seen successful ones. Luckily, we have not seen any unsuccessful ones. And there's reasons for that, right? We have cash buffers and all kinds of stuff in place in our business, and we work with reputable banks, and we're a reputable builder. So it's a good combination when we start a contract and start building a home. We drive it from start to finish, and our goal is to make it as smooth and painless of a process for the clients as possible. We don't want to have any, um, you know, contention or anything like that with the banks or the financial partners. That's the last thing that we want, and it can just throw a wrench in any build. So, yeah, we're always on top of that and always looking out for it. But hopefully, this episode has shed some light for anybody that's questioning construction financing. Like we said, it is a beast and it is a huge topic, and there's a lot more to it. But hopefully, this was a good kind of high level overview, just enough so that the listeners feel comfortable picking the right builder, and then knowing kind of what to keep their guard up on, and just be more informed on making decisions in that realm.
Yep. And I want to make sure we just address this last thing and we'll wrap it up. We don't want to overwhelm you. Once you understand the process, everything is typically more streamlined, and you can feel comforted that, okay, I understand what's going on and I'm comfortable to proceed. Right. So really the purpose of this episode is just, at a high level to share with you how it works. It is a beast, but that's not meant to overwhelm anybody. Once you understand things, it can be really smooth sailing and a great experience. So Stephen, thank you for your time.
Yeah, absolutely. Same on your end.